Welcome back to Kitco News. I'm Jeremy Szafron. Don't forget to hit the subscribe button. Now, the global economy is walking a tightrope, grappling with everything from trade tensions and geopolitical risks to surging debt levels. Now, the OECD's latest economic outlook offers a cautiously optimistic projection of 3.3% global growth in 2025, but warns that rising protectionism could derail global trade and economic stability. Now, in this uncertain macro landscape, how should investors navigate critical commodities like gold and silver? Well, joining us today is James Dima. He's the head of technical strategies at StoneX Group. James is going to guide us through the technical trends shaping gold and silver, including key support levels and these risks outlined in his models. Good to see you, James. Welcome to the program.
Thank you for having me, Jeremy. Great to be here.
Now, there's lots to jump into here. The U.S. dollar has remained persistently strong as we continue to see, and Fed policy continues to be a major market driver here. I got to talk to you a little bit about this macro, James. I mean, how is the environment setting the stage for gold, silver, and even copper as we continue to approach 2025 coming sooner and sooner, it seems?
Yeah, I think the data points that we're seeing are very cautionary. A lot of red flags out there all of a sudden that have been looming, and we're definitely going to dive into many of them. In terms of the dollar, which you had mentioned, we did see a negative weekly reversal pattern last Friday. That was the first bit of negativity in the dollar that we have seen in quite some while. Obviously, the market's been uptrending for a solid 2+ months, and we finally have some negativity and a red flag there. And in terms of momentum selling, which is a little bit more influential in the systematic trading world, watch for settlements, consistent settlements down towards the 105 level, where that would likely start to generate some trend following selling to add to the recent reversal from last week. So we do see some vulnerability there.
Okay, let's talk a little bit about some recent shifts in sentiment or any macro data that maybe has surprised you, that could have a bit of an outsized impact on metals here going into 2025. Anything of interest here?
A lot of the recent copper type moves very piped into interest rates, and as interest rates futures have stabilized a bit in the last few weeks. That's lent some support into the copper world, but we do see vulnerability there as well.
Okay, yeah, I'm going to get you to break into the technical analysis, but I got to ask you, James, before we do, because obviously we have this upcoming FOMC meeting here in December. It's right on the horizon. I know that the CME FedWatch tool is still predicting 125 basis rate cut this year. How are traders positioning in anticipation of potential rate cuts? And I mean, what impacts could this have on the metals complex?
I think the rate cut, any potential one in the remainder of this year, I think is going to be kind of absorbed into the market. Also timing with year-end risk off kind of mentality in terms of just the year-end and holidays, et cetera. So I honestly am not looking for any surprises or any, I don't know, about hero ball or any last-minute large trades done in trying to position for that, if that makes sense.
Yeah, no, absolutely. Okay, well, then let's bring up the gold technical analysis, because I have to jump in here. Following the U.S. election and Donald Trump's win, gold has been trading in a range between $25.50, $27.20 rather an ounce, at least on the spot side. Now, the precious metal is up about 28% year to date, but down 4% in the last 30 days. And we just learned that this week, central banks made significant moves in the gold market in October, reporting net purchases of 60 tons, according to the latest data from the World Gold Council. This marks the highest monthly total recorded in 2024, leading the charge for India, Turkey, Poland, each contributing to the surge in demand for the precious metals. So let's get into your technical gold outlook here. I know that there's some short-term weakness. Gold's close below that 200-hour moving average, has caught a lot of attention. So explain a little bit why this level is significant and what it tells us about the short-term sentiment.
Yeah, that while hourly data points can be obviously short term, they can have an impact on the market and kind of have a 1 to 2 week kind of overarching thematic. So yes, that was taken out today. The 200-hour average in Feb Gold was around 2665 area. Once that got violated, that did result in some shorter term technical selling. Now, this first chart we're going to look at, because what we really like to do in terms of our team at the Tactical Strategies Desk is really look for the freshest, newest flow, because that's what's going to drive the market. And yes, that 200-hour average is going to speak to the sensibilities of shorter-term traders. We're going to look at a daily chart, which is going to have a wider impact on the market. And basically, the daily chart is essentially not really showing you much from a bigger picture perspective. This range that you mentioned, 2720 into here, is I don't see any reason, unless you're clinging to a very old gold long. We're looking at this trend line here, right? This trend line, which dates back to early August. I know, August 25th, actually, was violated recently in November. And until we get over that line, that trend line, which is now up towards 2820, I don't really see a reason to be a large gold long until that happens, or to re-enter new longs. So to me, this tells me the pressure is really or is on buying has to be done to get the market over that trend line again. So I don't really see a reason to own gold unless you're clinging to the longer term bull pattern that we've been in for 12 to 18 months. So I just don't see anything telling me to be long gold here or re-enter it. I think I'll flip to the next chart in a second. Yeah, go ahead, Jeremy.
Yeah, talk about, James, that immediate range. I think I heard what you said there, 2620. What was that immediate range that we should focus on to determine if this pullback is temporary or if there's a start of a larger correction?
Yeah, here I'm going to flip to the second chart here, and this is pretty important. This is weekly data. Okay, this is a weekly continuation chart. We eclipsed this 20-week average. That is the black line there. And if you look at this 20-week average, it's a really nice barometer of bullish or bearish sentiment. Closes above, the market tends to attract longer-term technical buying. Again, it's a weekly data point, so that's why longer term. And a close below tends to unlock selling or downward action. So it looks like in June of 23, we closed below this support, and it lasted until October of 2023. You can never project how long a new close above or below will last, because that bullish event in October of 2023 was basis 1995. And obviously, the market rallied about $900 or $850 or so from there. So you do want to watch that 20-week average, 2616. It's a weekly data point, which means you need to watch it for Friday. Every Friday, look for a close below. That would be another indication that the market will see some form of exiting of length at the very least, and it might attract new selling. Okay.
Interesting. So what's that downtrend look like? I mean, your trend model has remained long on gold since July, as you're talking about these current, potential downside vulnerability that we see. A long-term bullish case here, or are you challenging that?
Oh, definitely challenging that. And as from that first chart that we looked at, again, that 2820, and let the market prove it until it can start settling above that trend line, 2820, which moves a little bit every day. So you have to look out for that trend line. That trend line could easily be 2850 in 2 weeks. So the pressure, again, is on the market to rally, or it's going to find vulnerability by breaking these downside thresholds. So I think I'll flip to the next chart, which is another form of downside vulnerability. So we're shifting from a weekly chart, 2616, 20-week average. Now we're flipping to daily data. The 100-day average, blue line, 2577. And the 200-day average, red line, 2432. Now, very coincidentally, or maybe not, if you remember the weekly average of 20-week, we eclipsed that bullishly in October of 23. Well, guess what? In October 2023, we also got above these two moving averages. So you got 26.16, 20-week, and now you've got 25.77, 100-day average. You get below the 100-day average, opens the door immediately for the 200-day average, 24.32. I don't want to get way ahead of myself, right? We go data point to data point. The first thing will be to break under the 20-week. Then you have to break under the 100-day. So the lowest I would go is 24.32 on the 200-day and reevaluate what the data points would look like after that.
Interesting. Okay.
Make sense?
Yeah, no, totally makes sense. So 24.32, obviously we're into a little bit of a downtrend here. Talk to me a little bit about the key drivers that you're focused on in 2025. I mean, as you look forward, and I know you don't give a crystal ball here, James, but what are your thoughts? I mean, there's still a bullish case for gold, but the technical side, are people going to be picking up the dip?
Well, they might be, but I don't know if that's going to be wise. I mean, if the market gets to that 20-week average, 26.16, I would assume that would be your first area to buy, right? So to me, again, you're buying over 28.20 on that trend line, or you're attempting to buy at the 26.16 area.
Okay.
But a disciplined technician, if we close under that 20-week average of 26.16, then they should either be flat or short. And then if that takes you to 25.77, the 100-day average, I would definitely, since we've been above that for a year plus, since October 23, I would expect buying interest to happen there. That line, I'm going to talk a lot about slopes as we go forward. The slopes of the moving averages are very important. So if you look at that 100-day average, as well as the 200-day average, they are upsloping. And we did test that 100-day average a few weeks back, and it was just a great area to buy. The upslope provides more support when you're testing it. So I definitely would look for more buying at that 100-day average than essentially even at that 20-week average. Yeah. But a disciplined technician, you settle below it, you're either flat or short.
Yeah, well said. Okay, let's switch over to silver. Obviously, it's up 32% year to date. In the last 30 days, it's down just over 1%. I think spot silver currently trading around $31.70 an ounce. Talk to me about silver. I know that there's a tight trading range. It's kind of stuck in that narrowest range in years, James. So what does this compression suggest about the market?
Okay, I'm going to flip to the congestion in 30 seconds. I'm just going to talk about what's something current, because what we're not talking about is what's happening now. I'm talking a lot about, in the gold studies, what could happen or what's looming. With silver, we actually had a study that went out yesterday, so I think it's worthy. It's momentum. It's short term. It's a very basic indicator called the MACD. Most people in the technical world will call it a MACD. It measures exponential moving averages, one versus another. And essentially, we filter those for buying crossovers below what's called the zero line. I don't know if you can see the cursor, but the zero line would be around here. That also is listed in the histogram on the right. So that did cross in a bullish fashion yesterday. So that should attract some short-term technical buying. And as per the chart, there are two prior scenarios, same setups, green vertical lines, that did unlock some short-term technical buying. But the key is a MACD and MACD is a 1 to 3 week type of indicator. And when you're using it on daily data. So I do want to be clear. So there is a little bit of a positivity in silver on a shorter term basis. And I will flip to the more esoteric study that you mentioned, which is the congestion in silver. So this we put out yesterday to our clients. and it seemed to strike a little bit of a chord with you, Jeremy. So I do want to delve into it.
Yeah, let's talk about that
you-
because, I mean, if silver breaks out of this range, James, like what are the key levels confirming a meaningful trend? What could it mean for the momentum here?
Yeah. Let me first just touch on what this study is saying. We're looking at Bollinger bands. Okay, what's a Bollinger band? Well, you see the blue line running through the middle of the prices here. And the blue line is a 20-day average. It's basically a nice reflective midpoint of the market. The red line on the top is 2 standard deviations above that 20-day average. The red line on the bottom is 2 standard deviations below that average. We run an algorithm that when these bands get super historically compressed, that it'll generate a signal to look for a breakout. There are many ways to express a breakout, which I will get into. The way we look at it is maybe for a little more nuanced trader. We're looking at pretty much options, buying straddles, which would be a put and call. So if we're trading 31.75, as you said earlier, we would look to buy the 31.75 put and call and look for a large move, which then increases possibly the volatility, which would increase the value of that straddle, or more importantly, the delta. The delta is when one of the legs, the put or the call, is increasing delta because it's getting very much in the money, which would be a result of the large move. Okay, so that's the kind of the backstory on this as a straddle. In terms of this as an area to look for a breakout, well, you could pair it with the shorter term MACD, which is bullish from the prior study. And some players might then just look into the world of buying the market or buying call options. Others might just want to put this study in a black box and say they want to buy the straddle. For the market to get positive in any way, shape, or form, if you look at that midline, that 20-day average we talked about, we broke below that clearly in late October. So if you're getting into the world of buying copper, you do have that one data point from yesterday, the MACD, and you do have the 20-day average, which is being tested. That average is 31.30. So you are above it. Yeah. 31.30. So you are above that average. So you could make a case for sure to at least, if you are on the buy side, to go to the upper part of the Bollinger Band, which I'm highlighting here. It's the upper red line, and that's close towards 32. It's almost towards 33 even. It's 32.19. My bad. Yeah. So 32.19 would be maybe the first area of resistance. I'm not going to really suggest anything that are outside the tea leaves, so I don't see anything that tells me silver is testing a new high or anything. I'm just going to say there is a short-term bull. I see resistance at 32.19. But I do want to get into maybe the next chart, which is going to show where things get wrong.
Yeah, please do. Okay. Let's show that in there.
Yep. And this is silver. With the 200-day average. Kind of similar to the 100-day average and the 200-day average in gold. It's a very important data point, inflection point that traders should be aware of. So the 200-day average, it's about 150 or so away, $1.50 or so away. That's at 30.03. That's the blue line. We closed above it in a bullish fashion on March 6th, and that triggered a lot of technical buying. That's for sure. That's defined this nice uptrend that we've had for the past 9 months. So that would be an area where you would look to buy if you're talking buying a dip. But again, being a disciplined technician, you settle below it, you're flat or short. Below that, things get a little more dicey again, which is, I guess, gets back to the thematic of the vulnerability of these markets. So below that, you're really in the 28.50 to 27.95 area.
Okay, interesting. All right. Let's we got to talk about copper here, James. I mean, it's been an interesting year. We've been hearing copper in the headlines all year around, and we're seeing this electrification, take place in the U.S., particularly with the new president as well. Copper's up 7.6% year to date. In the last 30 days, it's down about 5%. I know that it's testing its 100-week moving average at a level that many consider quite pivotal here. So how significant is the level? What are the scenarios if it holds versus if it breaks?
Yep, sure. We're going to talk mainly the COMEX copper. I might dabble a little bit into LME in case any of your viewers are tied into that. But for the most part, we'll start with COMEX copper. And good point in terms of just copper and the overall fever for it. We're seeing a lot of hiring, expansions, and a lot of the trade houses in the base metals world, whether it be into the battery type components of some of the metals. But in terms of March COMEX copper, here we're looking at a continuation chart on a weekly basis. We closed above the 100-week average, that blue line, in May. And that started this nice strong uptrend. Like most key moving averages, the way we saw the gold recently test that 100-day average a few slides back, this average has been tested several times in the last few months and is holding extremely well. There gets to a point where you could only have so many tests and things do go a bit sideways. So this is vulnerable. You do want to watch. Again, on Fridays, this is a weekly data point, so the confirming end of the candlestick for that week is off of Friday's data points. So that's one thing. Another thing we're going to talk about, which we talked about a little bit on the gold, which is that slope. The slope of this line is upsloping, which defines a bull trend, which is why these tests find more support and buying. But I'm starting to see that line flatten a little bit over there in the corner here in the middle part of the chart. So that slope is starting to flatten. Now, if that slope rolls over into a downward fashion, then the market's going to be vulnerable, which is, again, a big thematic of what we're talking about today.
Yeah. I mean, this average that you're talking about flattening, is copper signaling maybe a new trend? I mean, what range should traders watch closely here in the coming weeks for it to either diverge or go the other way?
Yeah, let me flip here. I might just, I'm going to flip here and then flip back. Hopefully it doesn't confuse your people. Because I think here, because what you're saying is a great point in terms of what could flip the script one way or the other. Because here it's a little bit like gold again, where it's a little bit in no man's land, and kind of like gold, it did break that trend line support over here on November 12th. So what's going to really get this COMEX copper to put a penchant on the buy side? Well, you're going to have to get over the, at the very least, you're going to have to get above into a neutral zone, which is the green uptrend line, which was broken again on November 12th. That's 428.60. So over 428.60, and this line looks like it's moving a little bit higher each day, so you'd have to check for that. It's moving almost half a dollar higher each day. So 428.60 currently, could be into the 430 area next week for sure. Close above that, a little bit more of a neutral stance. Maybe could see some buying on above that, to be honest. But really, the red line, the downtrend line, that's been intact for quite some time. That's in the 460 area, 459.80 it's labeled here. But that, again, is coming down a little bit each day.
Okay.
And ultimately, you could see sometime in January, those two lines will converge. So I really do think, using that January reference point, you really want to see where we are in the next few weeks in terms of these trend lines. So to recap it real brief, over that green line around 428 and change, neutral stance to maybe slightly positive, really need to get over that red downtrend line towards 460 to really attract renewed longer term momentum buying. And as long as you stay under that green line, market's a bit vulnerable. Could see a short off of that for sure. Yeah. And I'm going to flip back a page.
Yeah, please do. Yep. It's been a fascinating year, James. I mean, we've been talking about all-time highs on the gold side. I know silver hasn't been getting as much love as they want, but obviously, people paying attention. If you were to look at gold, silver, and copper, I mean, which metal is currently giving the clearest signals here?
Well, I'll go with the least passionate but the shortest term because it's right
Yeah.
there in front of you, which is the silver. So,
Yeah.
the silver two studies we looked at were literally sent out by our desk yesterday. So there's a lot less of here's what you have to watch for. But those are going to be quick hitter type trades. So a little bit of a short term bullish bias on the silver, but you do want to maintain that 20-day average support, 2130-ish, 3130-ish. And again, that compression does tell me a large move is looming.
Yeah.
Now, this goes completely the other way when we get back to this chart here in copper, because this is longer term. And but this really needs to be on traders' radars, which is why it's important to be in tune with technical data points, because you don't want to be sidelined and unaware when these things are happening. So this is our friend again, the MACD, the MACD, but it's applied or overlaid onto monthly data. So now that we're looking at monthly data, we could be looking at 6-month to 6-year trends. So back to that crossover logic, right? A crossover which is negative from above the zero line, which is the blue line below the red, it is going to be a bearish, right? And then when the blue line closes above, if you could see here in the middle, that's bullish. So essentially, if we go back here, and I think we're going back, to around 2011, 2010 on this chart, you've only had three, if you see the purple lines, negative MACD crossovers on monthly timeframes. And with the market trading around 419, 420 in March COMEX copper, and a month of the end of the month heads up that a close below 414 is going to trigger a negative crossover, it's really going to be important to pay attention. And if it doesn't happen in December, you got to watch for it at the end of January, because as we capture back here at the bottom, that trigger to cross over in a negative fashion is really moving. It was 386 at the end of November, and that trigger has rallied 28 cents to 414. So if we extrapolate on a ballpark sense and add another 25 or so cents, March copper at the end of January is going to have to be over 439 or very vulnerable to this crossover. And that, again, can last many, many months.
Okay, fascinating. Well, we'll keep an eye on copper. Okay, before I let you go here, James, if you had to, and I know, again, you're more on the technical analysis side, but if you had to pick one macro event as we approach the end of the year that could throw all of this, the script out, what would it be? I mean, anything that you're watching closely?
I think it would be, again, to leap out of my box of technicals. I think a lot of or chunk of Fed policy and different financial indicators, reports are kind of baked in. I would think it's really going to be a wild card of geopolitical events, right? If something happens, and there are obviously a lot of hotspots in the world right now, then a lot of the precious metals vulnerability obviously goes away, but that would be reflected in gold over 2820 and that trend line and it reestablishing a bull. So I think I would leave it at that.
Well said. James Dima is the head of technical strategies at StoneX Group, joining us from New York. Thanks for this, James. I appreciate your time. Obviously, we'll keep an eye here at Kitco News on the latest, and we'll have you back after this analysis.
Oh, pleasure. I'll keep you up to date on some of those longer-term data points. I know it's a lot to think about or digest, but they're on our radar, so they'll be on yours. Thank you very much. A pleasure.
Appreciate it.
Take care.
You.
Bye-bye.
Thanks so much. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We got some great data coming out this week. We're keeping an eye on. Of course, we'll have some great guests and commentary as well. Stay tuned, and we'll see you next time.